Hey, Michael, what's going on? Thanks for taking out the time today and chatting with us.
Sounds great, Peter. Mike Tish here from over at Homeroom. Happy to be on.
Nice. So, before we jump into the full length interview, can you tell us a little bit about yourself and also the company?
Yeah, sure. Mike Tish, one of the co-founders, head of growth over here at Homeroom. What we do is we take 3 to 4 bedroom houses, renovate them, add in a few extra bedrooms, usually try to hit 6 or 7, find investors for those properties, and then rent them out by the room. So we're sort of a vertically integrated one-stop shop for every rent by the room property you might be looking at. So right now in 9 markets and growing pretty quickly. So.
Okay,
Um, my background worked at Airbnb, Facebook, a few other places. So
nice. And all these, how many partners are involved?
right now we're at about 120 or so,
Okay,
close to 150 houses growing, yeah, like decently quick. Obviously, the market has been slower now than maybe it was 6 months ago, but I think we've still managed to um, find ways to like find pretty good deals, right? So, like if you find like a single family house now, like good luck trying to find something like about 4 or 5%, where we can like usually we'll target between 7 and 8 in terms of just raw like cash flow.
right.
And it's been out like historical returns like for the last maybe 2 years. So
Yeah,
um,
it's been fairly solid. What have you guys seen? Like, what are the difficulties? So you say you're in 9 markets.
mhm.
What market did you start in?
Yeah, so we started in Kansas City. That's just where our CEO was from, and locally it just made a lot of sense. Um, then kind of went from there, expanded into Texas after that. So that's where like Texas is kind of like by far the second biggest. Um, Actually, kind of close to Kansas City now between Austin and Dallas. So Dallas actually, I think, is that's coming close to our top market right now, just because how crazy that is. Um, we launched like Florida with Tampa pretty recently. Launched Phoenix about maybe 2 months ago. Indianapolis and Pittsburgh in the Midwest as well. So, um, yeah, we're continually adding more areas. So basically, if we find a partner that already has a few couple places that wants us to manage them, we'll just like instantly expand there, right? So, the main blocker for expanding to areas is usually just like an agent on the ground to check out all the properties. So, um, if we have someone that already has the properties, then it's very quick for us to expand pretty much anywhere. So.
So what about the contractors getting these things from, 3 to 4 beds to bigger?
Yeah, so we'll a head of operations and construction comes to mind. A guy named Billy. He's pretty great at just finding good partners on in the ground that like vets out this. Okay, these are people that have pretty good reviews. Um, they'll maybe they know the agent or something like that. And then okay, if we have a good experience with like one house or one project, then we'll start using them for larger things. So.
Got it, got it.
One thing we realized we can do that pretty much all remotely.
Okay.
None of those like contractors are like employed by us, right? So it's just like finding that third party company and like getting all that stuff done. So
And then just paying them. Yeah, paying them at
right.
the
Well, the investor pays the contractors directly, right? So we're just more of a connector to find someone that we work with before and like and work with. So
Gotcha, gotcha. Okay. And then like your position in the company, as homeroom,
mhm.
what does your day-to-day look like?
Yeah, so I'll be running anything from like running our digital marketing campaigns to building out models and trying to figure where we should expand, um, making updates to sort of various pro formas and investment products we offer, putting together decks to investors. Been doing some engineering campaigns recently. So uh, we're a startup. We have maybe 10, 15 people in the US, like full time, right? We have a pretty large international full time team as well, but we're still very hacky and like just try to get things done as quick as possible. So.
Gotcha. Gotcha. So you made mention you worked at Facebook before.
Yeah.
Yeah. And so did you feel like, especially moving over into this company,
Mhm.
having the experience that you had at Facebook and stuff like that, and like the position, it helped you, or do you think?
Facebook, not as much. I think Airbnb definitely.
Okay,
Facebook, I had a bit of a weird role where I was like sort of a consultant helping people run Facebook ads, mostly on like the data science side, um, which was interesting. There was a lot of internal politics there where it kind of could have been run a little bit better. But like the um, some of the experience I had at Airbnb was pretty great, right? So there was like I was kind of like a half data scientist, half project manager, responsible for like finding new hosts all around the world. So we ran a lot of different ad channels, tested a lot of different things. Really just tried to find everything that could possibly work, right? So
Yeah. And how often, like for you guys, how often are you guys testing at Homeroom the ads and
mhm.
also the data that's coming back from those ads? Is it a daily thing or is it a weekly thing or a monthly thing?
Pretty much every like two, like usually 2 or 3 times a week, I'll go in and test, see what's working, what isn't. Have a, like an all hands meeting with like the me and a few of the other people, and they do a lot of the content generation and just start pumping out more stuff. So
Gotcha. Okay.
um, yeah,
And what
yeah,
have you?
it's weird what works and what doesn't. Like sometimes, like the main insight I've had over the last maybe like year and a half is like really just showing people numbers of historical deals has been like incredibly successful, right? So like real estate investors are all like incredibly tech savvy. They like to just see the data, and like that's usually what works. So
Yeah, and I feel like these days, especially with so much changes in the algorithm and stuff like that, you guys probably have to make sure that you're staying on top of, where
yeah,
your ads are going and what you're getting on those ads too. So
yeah,
what have
yeah,
you
no,
experienced the last? I would say the last. I mean, granted, everything's kind of changed over
yeah,
month to month, but the last 2 years have really changed, especially Facebook. And you mentioned Facebook was a pretty good one right now for you guys. What have you seen in change, and how have you guys been able to combat that change?
yeah. I mean, it's been we've definitely done a lot of diversification. We are spending more on Google now than we were then, maybe like 6 months to a year ago. Um, it's also the like CPAs have gotten higher for us, right? So it's as you scale, it's naturally going to happen. We were having very strong LTV to CACs on a lot of our channels there, but yeah, it ended up calming down a bit, right? So
Okay, cool. And what do you see like moving forward, especially with the landscape of um, marketing, ads, and everything else? Like, what do you think that the next 6, 12 months, granted, this could be a prediction for you that
yeah,
you don't know exactly, but what do you see, moving forward?
yeah. I mean, I think the real estate market as a whole, it does seem to be like it's probably going to plateau, at least in terms of like raw prices for a decent amount of time. Obviously, incredibly hard to speculate, right? So. Um, We've already seen prices decline slightly in most markets across the country. Um, our markets are usually more on like the cash flow side, so they haven't fallen quite as much. The markets that really relied upon that appreciation potential have really fallen a lot. Like Austin, one of our most expensive markets, has fallen the most. Bay Area, where I am, has fallen almost 10 to 15% in the last 2 months. Right, so um, something that I think people have not necessarily like. It is very local though, right? So like Dallas, Kansas City, like actually up slightly since like where they were. Tampa's up by a good amount. So like it's just weird. My market's a little bit different, right? So usually the markets that cash flow and we can hit really strong cash numbers like 7% plus. They really haven't fallen much at all. So
And
um,
would you say those numbers, especially for that area and those areas that don't fall, they're kind of like fairly stable? Are those more
yeah,
like inner states of the country? So like Midwest and stuff like that are
it's
pretty even.
yeah, it's generally been places with historically cheaper real estate in terms of like an ROI perspective, right? So like you look at a Bay Area real estate, it's like very, very heavy appreciation based, right? So like you need very strong appreciation to justify the return there. Whereas if you own a Kansas City place, if it maintains its value for 15 years, it still might look like a halfway decent investment, right? Like obviously you don't want that, but even if it did, you're still getting pretty solid cash returns after all your costs, right? So yeah.
Yeah, yeah. No, I feel like that's part of the course, especially if you look at the last couple of years, like you
Yeah,
have, or the last couple of years, last 20, 30 years and more,
exactly. Yeah.
New York and California and all the West Coast, East Coast have really went up, and then stuff in the middle has really stayed fairly flat.
Yeah.
And gone up maybe a little bit, but there hasn't been a huge appreciation jump like that we see, especially in California, West Coast,
Yeah.
and on the East Coast, and like New York and stuff.
Yeah, California's weird because you got Prop 13 and all that, right? So like they built in to incentivize holding it for like astronomical long periods of time. So um, other states don't necessarily have that problem, right? Where like average length of like you might only own a place for 7 years, right? Because there's not this like absurd incentive to never sell places. So
Yeah. Yeah, and for I guess the one thing for us, like if we're looking at investment and stuff, these areas that are higher priced, like a California or New York or now Texas,
yeah,
you have to be a little bit more fluid and also make sure that you're doing a value add or you're doing something thinking outside the box, right?
exactly. That's the same thing with my one rent by the room company in the Bay Area. It was very much like I found it that way, right? Which is like
Yeah.
it was a 3 bedroom. The previous owner was like really weird. The agent was not really doing a particularly good job, so they got like 2 or 3 offers, and we were able to get in for a relatively reasonable price to the point where we were like grossing like 70%, right? So um now like that's still net after costs is maybe one or two, right? But for the Bay Area, that's like kind of a lot.
Hmm.
Whereas like in Kansas City or anywhere in the Midwest, it would still look like a terrible investment. So um but here it's like appreciation's been insane. It's like been like it's up like 50% since when I bought it 5 years ago, right? Like it's just crazy. So um who knows if that continues, right? Like that's always a tough one. But
Yeah.
um,
Yeah, no, for sure. I mean, that's the guessing game. That's, the back and forth. What we've had the last 6 months is,
yeah,
people saying like either, it's going up or it's gonna, go up 1 to 2%, or it's gonna stay, fairly consistent on going up. And then you have the other camp that says, it's going down. We'll see it, worse than 2008, 2009. So
yeah, I don't think it'll be. I mean, I think it's more of a local problem. I don't think you have the like ridiculous. Like, it's not as bad on the mortgage side, right? Where you have like at least in places that I've been seeing, you aren't having that many people forced to sell, right? So you just lead to the situation where like inventory just keeps creeping up, and then like things just sit on the market for a while, and it'll like slowly go down, maybe or not, right? It's just not like real estate takes a while, right? Like
yeah,
the tech companies, like a lot of them are down like 30, 40% if you exclude the last few days, right? So like the
yeah.
real estate market just follows that here, right? Like in other markets, not necessarily, right? So
Yeah, yeah, I would say so. I mean, I think what we've seen the past 2 years is not an indication of what we'll see going forward. But I think a lot of it comes down to the inventory too. Like we don't have the same amount of inventory as we did back in 2008 when we were going into that
yeah,
crash. So I think that's a factor too. I think if you look at those data points and the trends, it's not going to be where, and granted, let's take out
yeah.
the
There's less
better.
arm mortgages too, so you lead to less like these inflating rates leading to people being forced out. Like it's not. I have two arm mortgages, so maybe I'm a
Yeah.
bit of an outlier, but yeah,
Well,
most
and
people
I
do. So,
yeah, and I think that too, where you ultimately have this situation where a lot of these people back then got in a position where they couldn't afford it. It was an arm mortgage, and but it flipped on them, thinking that they could afford it. But then when the market changed and people started losing their jobs, that's when all of a sudden that mortgage flipped and they had to
yeah.
start paying more. And then the not so good lending practices too were a big issue as well.
Yeah, I think part of this is like, if you're buying for a place to live, it's one thing. Most of our investors are trying to buy for like long-term cash flow. So like, higher inflation usually means higher rents, right? So like rents increasing 8% year over year, usually just it's only going to make it look like a better investment 5 years from now, right? So
Yeah,
um, getting in now doesn't like you're still going to be making cash year over year, and like it's like if you had a dividend paying stock that was paying at lowest like 5%, right? Like you wouldn't be like that worried if the price was staying flat or down slightly, right? Like um, so.
yeah. And so, what like for you guys grabbing investors and stuff like that? So, are you with these purchases and everything else? Are you syndicating these deals? Or what are you doing with these?
We have done some syndicated type deals. So we'll have like syndicators want to buy with us. Like, I'd love for them to reach out. So
Yeah,
we've had people that own 5 or 6 houses through our platform as syndicators. It's not the majority, but they do own like each one does own a lot. Um, Yeah, so it's mostly individual investors, right? That maybe like only have 100K down if they're in the Bay Area. That's not buying much, right? But if they can buy like a pretty decent sized house, making decent cash flow in either Kansas City or Dallas or San Antonio. So um, yeah.
So how, yeah, with you guys, so you're getting the investors, and then you're getting them on board with being able to cash flow more, obviously, with buying that single family and then converting
Mhm.
the rooms. How much of a part do you guys play after you guys close, do all that stuff? Are you guys doing any type of property management, or is it just all on
Yeah.
that investor?
So we do 100% of the property management as well. So we
Okay.
have a globalized team that finds the tenants, vets the tenants, and also wants to be like very much a good living experience for the tenants that live there. So our average length of stay is 16 months, which is like quite high in the co-living
Yeah.
industry. Average is about like 9 to 12. So
Hmm.
um, yeah, we do a lot to try to make sure people are like having good experiences. If they don't like a particular place, they can move to one of our other places in the area. So what we'll do is we'll sign an agreement with the owner where we will find the tenants for them, and then the tenants will sign like a master lease agreement, and then the on paper, and the tenants will like sign an agreement with us. So
Mm.
if they do ever want to sell the property, we'll just find additional places for those tenants to live. So
Okay.
it allows a little bit more like flexibility and fluidity with that investment. So
And do you see, I mean, over the course of, at least the last year and a half, have you seen a lot of sellers saying like, "Hey, I want to sell my property"? And
shockingly few.
oh, really? Okay.
We've only had maybe a handful, like 2 to 3, that have ended up selling. A bunch of them have sold to other investors, like one of the platforms. So we'll find them other buyers. So we have a pretty large network.
Hmm.
Also, if the place is already built out for it, like there's no construction fees, so the investors save the money there. So those deals actually go quite quickly.
Oh,
That sell within the platform. I think another thing is like when you're buying places for cash flow, especially long-term cash flow, you're not getting into it to sell after like 2 or 3 years, right? Like you're really getting into it to hold it for 20 years and really build out like return every single month, right? So as long as our returns are good and like they've maintained pretty well, like our occupancy rate's still at 94%. As long as we keep that up, people really don't sell.
okay.
And like technically they could manage it themselves if they really want to, but it's like remote real estate investing, like management is like very difficult, and
Yeah.
we don't really charge that much. Like we only charge like a 15%, where like Picasa and these vacation rental companies charge like almost double that, right? So
Yeah.
yeah.
Yeah, for sure. How have you guys? Do you guys, when you get that contractor, do you also partner with them on repairs too throughout the process? So, like, if
Yeah.
they convert all these rooms, then all of a sudden, that person owns it for 15 years. You use them as the go-to person to replace a water heater or the AC and stuff like that, or do you find someone else that's a little bit cheaper? How do you guys run that?
Yeah, so it's very similar to just we'll just okay, if something else goes wrong, we'll just send it out to a network of people we've worked with before and just yeah, see who can do it. So
Okay.
yeah. I'm not that involved in the
Yeah.
operations part of the business to be honest, but
Yeah.
yeah, like Billy's probably pretty great at running that side of the thing.
Got it.
I just know we have a lot of like a lot of third party companies where I like personally, whenever I some like for my personal property that I self manage just for the experience, I just like send out 30 Yelp messages, like pick the top three and like
Yeah.
type by price and like have one of them come out. So um,
Yeah. What for data wise, so we'll go to your bread and butter of the
mhm.
company. For data wise for you guys, like how has it come from the start, and what have you guys systematized and also became more efficient at since you guys started?
Yeah, so we have a pretty sophisticated model that looks at sort of what all the room types places are renting for on various sources. Um, Gets that data in every day, and then runs a model that basically predicts saying, okay, we have this house in this flat long location. It is this many bedrooms, this many bathrooms. This is like how much each one of those bedrooms we rent for. Uh, it's been like it's been working pretty well, right? So each one of those we'll have a new potential house on the market. We'll say, okay, we'll look into it manually, saying, okay, this is a 3 or 4 bedroom right now. We think it can become a 6 pretty easily, um, with like this amount of square foot for each bedroom. Like, oh, we can rent each one for 400. So, okay, that's a 2,400. Like that gets put into the pro formas. And then we send that out to our database of potential investors. who are actively looking for properties. So
Okay. All right. And is that just like a email blast that you guys send as soon as you guys find that property, or do you collect quite a few of them, and then once you send out that email to them, it's the whole whole investor pool, and it's multiple
yeah,
different
it's
properties?
pretty much we'll send like a few emails a day to the investor
Okay.
pools of like, oh, these are some properties we identified today. So we have one guy on our team that basically is just responsible for using some of our internal tooling, going also on the MLS, finding all the other properties, entering in ones that potentially fit our criteria, and then sending them out. So
If you guys don't have access to the MLS, do you reach out to those agents in that local area to give access, or do you guys just search that on?
yeah, I mean, Redfin, Realtor,
Okay,
Zillow has pretty much everything. So
got it.
we also have an agent in every market that we partner with to eventually purchase the property. So if like there is anything that needs to be done regarding that, we do have the ability to do that. But there's not much, like everything's pretty publicly available now. So it's
Yeah. How do you reach out to that agent to get a hold of them? Do you guys do your research just like you do, comparables and stuff like that to make sure the agent's going to be, for one
yeah,
qual?
yep. We've so we'll like if we'll have people reach out, we'll look at their current scope of work. Most of our agents do some type of rent by the room management themselves, or like they'll like they've been in it for a little bit. So if we like look at their properties, make sure like like it fits the similar type deal that we're like what we're currently working with. Our existing markets, our agents have bought in all of like 40 houses with us, right? So um, yeah, they know what we do pretty well, and we understand okay how they can like make sure that the house is up to the requirements it needs to be and get everything done there. So
Got it. And making these offers, are they financed offers? Are they cash offers?
uh,
Does it depend?
all of it both. I would say probably 70% are financed,
Okay.
but there is a decent amount that will be done cash offers, right? So it usually just depends on who's buying it, right? Like syndicated deals, they'll usually do cash offers and do like a cash out refi after the fact, right? And then you just have to like buy the next one. Um, but individuals, a lot of it's just like pure financed, right? Like traditional 30-year fixed. So uh,
And and for you, how does going about making sure that you're growing that list of investors? How do you guys usually do that? Like, what have you guys found is the easiest loophole on getting more investors on that list that are qualified and actually serious?
yeah, so I mean, like Facebook and Instagram ads have been almost 80%,
Okay.
which is kind of crazy. Like you wouldn't think it would be. Like you'd think it'd be like Google has been like the struggles to work outside of like SEM brand, which is like um, is very frustrating because like that was a huge channel for us at Airbnb. Um, yeah, like we do like just random ads online that like that's been pretty big. Facebook lead ads have been pretty strong.
Okay.
Well, like we do some LinkedIn automation stuff as well for like people that a lot of people don't actually put it on like LinkedIn profiles, so that's a little bit harder. But
Yeah.
um, yeah, we do a lot of just like lead gen campaigns of like okay, people enter their emails, add them to the list, and then we'll have initial sales calls with them to make sure they're qualified and all that. So
Nice. Yeah. I would say, Facebook has changed a lot, but it's one of those that's a huge
yeah,
it's a huge one that you can end up utilizing for not just that type of
yeah,
advertising, but just finding leads through people that are looking to buy a home, people
yeah,
to sell a home
definitely.
and stuff like that too.
Yeah, we're really looking to diversify as well. So if you have with just like our channel mix, right? So like we constantly launch new stuff. Most of it hasn't worked, but like there's really has pretty much anything, right? So yeah, we're hiring a marketer right now to like run like some of the other marketing channels as well as like some brand marketing and events and PR and a few other things. So
Got it.
um, yeah, we were
And
on Product Hunt a few weeks ago. That was a pretty big success. There's been some like pretty big PR successes as well. So
yeah, 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 yeah. For when you win, you end up getting those investors and at least the range of purchasing.
mm,
Um, is there any type of pushback when you guys, get them into, okay, here's the funnel, here's the top of the funnel going down, like on the qualifications or anything else that you get some pushback on, like, hey, I thought you guys were doing this, anything else? And how do you guys make sure that you ask those questions or align yourself with what you guys have been doing?
yeah, we're like pretty super transparent with sort of how the whole process works. There hasn't been too much of pushback. I mean, obviously we're like a pretty early stage startup, so like we don't have ridiculously amazing real-time reporting systems yet. It's all monthly, like email blasts, right? So we're continually working on automating it and yeah, figure that out. So yeah.
And giving your, I would assume, each month and stuff like that, you give your investors some type of, spreadsheet, P&L or anything like that. How do you guys run that? And what have you done to make that a little bit more user friendly over the past
Yeah.
couple of years?
Yeah, so right now we're still doing it's pretty manual, like not manual-ish. Like so we've automated most of it, right? But like we have like we use building in for our accounting, so we connect into that. We send automated emails like built on top of that with it tailored a bit to like rent by the room nuances. So you can see, okay, like these are the current lease agreements, these are the current tenants, these are the rent that they're paying, this is the rent collected, any repairs that we did during the month. Um, that were like so usually there's like a small threshold that we give. I believe it's like 2 or 300, where like we there's not necessarily an approval from the owner for large like upgrades that there is, but like sometimes it's just small stuff that breaks, right? So that's
Yeah.
kind of built in usually to those upfront models. Um, but yeah, that's been mostly automated. We still have a team overseas that basically like does some manual checking there to make sure everything is like 100% lined up and correct. But it doesn't take too long, and yeah, like mid-month we'll have it pretty much ready for the month before. So
Gotcha. And
yeah.
what, like, for running numbers and stuff like that, what's the threshold from when you guys started to now on the return on investment? Like, as prices have gone up, have you guys
Yeah.
gone down? And what's the threshold where you say, no, we're not going to invest in this?
Yeah, so obviously it varies a lot by market, right? So in markets like Kansas City, like when we started, it was like at 7 or 8%, right? It was like easy. Now it's definitely gotten harder. Now in the performers, we're usually conservative, so we'll try to hit like 4-ish%, 5% in those high cash flow markets after all expenses and principal and interest and whatnot, right? So um, it's definitely come down. But then you look at a market like Austin, like it'll basically break even slash slightly positive, right? So like just because the appreciation has been so crazy and like the expected appreciation for rents is like expected to go up, right? So a lot of it's like, okay, maybe it's breaking even 1-2% now, but we project in 10 years it'll be at a pretty like solid like 10%, right? So it's just a matter of okay, figuring that out and like making it pretty clear of okay, do you want more like long-term growth of rents or do you care more about just like the short-term cash flows now, right? So every investor is a little bit different on what they're looking for, and um, I would say what we do differently works a lot better in those markets where they cash flow really well. We don't have like we maybe have 15 houses in Austin, but 50 in Kansas City and 30 or 40 in Dallas, right? So
Okay.
yeah, the cooling off of the market recently has also helped quite a bit. So
Yeah.
it was like quite hard, and it's been getting a little bit easier to identify houses. So
Just to like get the deal done, just because, more inventory has popped up. Is that what you mean? Just to get those deals across the
right,
table?
exactly.
Okay.
Um,
Yeah. And then for when you get maybe a syndication, talk to me a little bit about, you've only done a few syndications, it sounds like, but
yeah.
doing those, like, what's the setup on that to get that done?
Yeah,
And
we'll
what,
usually work with some type of lead that sort of manages, like finds the other partners that sort of buy into it. That's what we've done so far, at least. At some point, I think we'll definitely probably do our own syndicated type deals, but it's not like it's a lot of work and just heavy having like it's not been that high priority.
yeah.
Um, that I'll find maybe 20, 30 people looking to put in 100K. And then we'll take that 3 million, we'll identify 7 to 8 houses to purchase. We'll put in offers, try to get a bunch accepted, try to diversify between all of our different markets. Um, Purchase maybe 6 or 7 houses, do cash out refis, start the construction work, start renting out those initial houses. Once they're fully rented out, then we'll do all the get the final like the cash out refi stuff fully finalized, and then use that money to buy additional houses with cash. So
Gotcha.
um, yeah,
Yeah, that
so
makes
it's
sense.
similar, I guess, to like multifamily type investments, except we're doing it with multiple different single family houses at scale. So
Yeah,
yeah.
yeah. No, for sure. That makes sense. And like, what do you see? Like, what's the big goal for the next couple of years, especially going through more turbulent times than we have,
Yeah.
um, the last couple of years? What do
Yeah,
you guys
we'll
see
see. I
like
don't
goal
know.
wise?
the last 2 days, the recovery's been pretty good, right? So who
Yeah,
knows,
no,
right?
for sure.
But next week it could be down another 30%. So who knows? Um, yeah, I mean, like I think it's like we mostly just want to keep going, right? And keep getting to the point where like we have quite a bit of runway. We just raised a pretty large seed round, so like um, we're not really in risk of us like going out of business anytime soon. So we're in like a okay, how can we just keep growing even if it's a slightly slower rate than what it was in 2021? If we just can keep on adding more houses, keep renting more things out, keep building out more experience, it'll just build on top of itself. And we're not that far away from like breaking even, right? So, yeah.
I guess I guess my next question for like underwriting and stuff like that with interest rates going up, how do you guys combat that? Do you guys, depending on like what, obviously let's, exclude the Fed and stuff like that. Like
Yeah.
if you're looking, you do a syndication of 3 mil and then you're going to go take all that money and invest it. Are you looking to do, the rates today are 6%. Do you put like the numbers together at 6.5% just to make sure like it still pencils out?
Pretty much, yeah. Well, like usually syndicated rates, like they're usually a little bit higher. In the LTVs to loan value, right? It's like it varies a little bit. Um, but yeah, we'll price it out based on the interest rates, what the syndicated lead thinks that they can get, or historically have gotten with previous like projects they've done stuff work with.
Yeah.
Yeah. Yeah, usually like it also varies, right? Because sometimes a lot of those type of like appreciation, like if they're getting higher cash flow out of the property, sometimes they can get higher valuations based off of that, sometimes not. So usually we're very conservative and assume they can, but sometimes okay, they're taking a house that was renting for 2K, now it's 3K. Um, some banks will maybe say, okay, it's like you can value it at a bit higher, but not all of them. So yeah, it varies.
Yeah, yeah, for sure. No, I could see because it's such a transient type of thing with at least things that come up and things that
Yeah.
that we can all see on our side versus what's going to be the next 6 months down the road, and you want to make sure that those investors aren't caught by surprise or something like that.
Yeah, they well, that's a good thing about buying cash there, right? We have like if you need to wait 6 months to cash out, like to refinance, like it's pretty easy to do that, right? Like I don't think we expect like interest rates to be this high, like inflation and
No.
interest rates to be this high for 2 years from now. Um, but like good luck trying to find an like anyone that has any clue, right? So
Yeah. No, for sure. And I would say, I'm not trying to like, figure out the market from here on out, just more so curious, like when these numbers are ran, like just taking into account, like if there is something that does come up, you guys, you're obviously circumventing that prior to going into it.
right, and I think part of it is like okay, you're at least getting cash outflows every single month, right? So there's like um if you're at a place where you're barely breaking even or losing money on it, there's a little bit more like urgency there to refinance, right? Where like, okay, yes, it's not a might the investment might not look as great if you're not buying more, right? But it's still like going to be pretty decent and strong cash flow, right? So
Yeah. Yeah, for sure. Yeah. And I guess, going forward and stuff like that, looking at those, areas that really do cash flow hard, they're a little bit more competitive, but also
yeah,
the next, currently right now in the next like 6 months, they may be a little less competitive because, those people may be in a position where they, more people have lost their jobs, unfortunately. So, there may be some more houses sitting on the market that you guys can capitalize on to not really even have to
yeah,
worry about the interest rate so much because you can negotiate that sales price.
yeah, for sure. Yeah, if lease takeovers, especially if someone that has a single family rental and is looking to try to help them get more rental out of it, it's maybe 20% of our houses now, right? So it's still like a solid chunk, right? So if anyone has a house that they're like looking for a long-term single family tenant, we can run the numbers on it. There is a bit of like you do have to do upfront construction, right? So there is like that's always a little bit harder, right? When you're like not planning to spend, I don't know, $20,000 to do construction work, but it is a fair number of our work, like a fair number of the houses on our platform.
Yeah.
So,
Yeah, for sure.
yeah.
Um, well, I have a couple more questions just to transition a little bit.
For sure, yeah.
For you guys, like what is one good system that or platform, anything online that you guys are using right now that's helping you guys be more efficient?
Okay. I don't know. I've been doing a lot with like Google Ad scripts and like automation there. We have some like Snowflake databases that have, like we've been funneling all of these like more manual processes into, and then we're using like Fivetran to automate a lot of these connections. So like every day, okay, someone updates something into a spreadsheet, it'll get pushed to our databases. We're still working on like fully automating the pieces like on the front end website. So we have like the tenant facing website live off of the whole system, right? So if it's like once something gets created in our back end accounting system, it'll get live and pushed to our website. So we still need to do that with all of like our investment products, but
Hmm.
yeah, we're slowly getting there. So there's like yeah, there's been like a lot of database tools and connections that have been quite useful. So
Yeah, 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 for sure. What would you say one book you've read, doesn't have to be recent, but that's a good book just for investing or someone that's looking to get into real estate?
just I haven't. I'm not a big real estate like book fan to be honest.
Okay.
I don't think I
Any
ever like
business
read
books?
much at all. Hmm?
Any business books
Oh yeah,
or
I read like what was it like? What was that Andy Grove book that I read a while back? Actually, I think I still have it here. Let me find it. Oh yeah, high output management was a good one, just because like it's yeah, first time kind of running like a large team over here at Homeroom, right? So um, yeah, so it's been a lot of like, okay, how do we just like scale up? How do we do like the most highest leverage type work that we can do and do more
yeah,
stuff to find more investors, right? So
yeah. No, that one's I haven't read that one, but I got that down. So okay. And where can anybody that's looking for you, that wants to invest or anybody else find you guys?
yeah, so if you just go to livehomeroom.com/invest, it's sort of our main landing page for everything investing. So um, yeah, always down to if anyone like runs podcasts, definitely down to have people on. If anyone wants to like run a syndication deal, like yeah, definitely reach out. Yeah, you can also personally just add me on LinkedIn, like accept pretty much everyone. So yeah.
Okay, cool. Well, Michael, is there anything else that we missed that I didn't ask you during this interview?
No, that's pretty much it. Yeah, thanks so much. Yeah, it's like
Yeah.
yeah, I guess like I don't know much about your background and like what you guys do. So yeah.
Yeah. So, residential real estate out of Orange County, California. And then I have all my investments I do are all in California. So I don't really dabble outside of California,
Mhm.
but we do single family in like an hour east of where I'm at in Orange County.
Yeah.
And then
Mhm.
we also just got approved for an ADU. So we do some
Oh,
ADUs
nice.
as well.
Yeah, I know in California it's gotten way easier. So it's
Yeah, so they basically came out in 2020, or sorry, 2017. The governor said
yeah.
like, "Hey, you can do an accessory dwelling unit in the back, basically the backyard."
Yeah, yeah, I
These
have
were
one. It's pretty great.
Oh, do you? Okay.
In my other investment property, yeah, it's
Oh,
been
nice.
it's been great.
Yeah, and then they did. Let's see, another one in 2017 because a bunch of cities put all these regulations into place, and
Yeah,
then the state came back again and said like, no, this is what the standards are. You can't really bend so much because they did a lot of different regulations where it made it impossible again over those 3 years to
yeah,
put an ADU, but they've changed it again. So now you can do it on rental properties. Before it was just on single family primary residence. So
mhm,
you can do it in condos. HOAs can't really say like you can't do them anymore. So that
yeah.
those types of things are really good.
Yeah, the Bay Area, they have laws, but their their enforcement team is not huge. So let's put
Yes.
it that way. Because I bought this place in 2017, and like I don't know, I'm barely in the place, but it was built during the 70s, right? And like
Yeah.
apparently it's still fine. So like
Yeah.
at some point it was permitted, right? But like I have no idea since then. So yeah,
Yeah. I mean, that's obviously the permit fees and then getting all that stuff is a little bit more challenging. But at the end of the
yeah,
day, the I mean, it took us like almost a year to get permitted.
yeah.
But at the end of the day, like we spent, $75
Mhm.
$100 just to get the structural and the architect to do all their stuff, and then
Yeah.
the permits are like an extra $9,000, and then on top of that, then it's like another 150 to 175 to build onto the existing garage that we're looking to build onto.
Yeah, exactly. Yeah, I know the Bay Area, there was like a big article that like San Jose basically like a whole bunch of houses. Um, Yeah, it looks like in the Bay Area, like it was like only a handful of people had actually done the permits for them. Um, but like a lot of people have them. So
Yeah. Yeah. No, it's
just
there's a
because like
lot of
it's just like such a nightmare to go through the whole process, right? And it's like so little enforcement, right? So although it looks like it spiked recently. It looks like it's yeah, it looks like it was 215 last quarter. So that's pretty crazy.
Yeah, yeah, there's quite a bit. I would say more and more people, obviously, like the challenge is in a lot of areas, the appraisers aren't willing to appraise the value for like, they'll just appraise it as added square footage on the property. But
Yeah.
like LA, for instance, LA has a ton of them. Those are a lot easier to get the value when you do a redo on the
Yeah.
appraisal. So if you're refinancing to cash some money out,
Mm,
a year and a half ago, 2 years ago, it'd be a lot tougher to get that money. But now it's easier and
yeah.
easier
Yeah,
as
my
time.
place is appraised as if it didn't exist. So
Yes, yeah, yeah,
which is like even worse. So we're like, that's why we bought the place so cheap. Like if that thing had been like part of the like value of the house, that would have been at least another like 400 grand, right? So it's
yeah,
like
easily.
um, we save money on taxes. It's yeah, very very helpful. So
Yeah, yeah. I mean, the appraisers are catching up these days, but I mean, I've heard a lot of stories where people go to get it appraised, and they're like, "Yeah, we'll give you like 25,000 extra dollars," but they spent 180.
yeah,
So those are the issues that we're still kind of working through. But the bigger cities that really need them, like in LA or up in the Bay, those those markets are a little bit easier to get a comp, so you can actually get
yeah.
the right evaluation for your property.
I mean, it's insane though because like the thing rents out for like 3,800 a month, right? Which
Yeah,
is like a lot of money,
yeah,
right? Like
yeah.
you
It's more
think it
like
would add some value, right? Like 50 grand a year income. It's like, yeah, it's like,
yeah, exactly. Like I feel like, and you can kind of show that to that
right, exactly.
appraiser, but
Yeah,
those appraisers don't want to sign their name on a dotted line saying that,
yeah,
hey, this is where we're at, and
yeah.
then all of a sudden realize that maybe
The
the
one here I bought was also weird. Like for some reason they built an 1,000 square foot ADU with like 2 bedrooms, like really fancy kitchens, really fancy like bathroom, like multiple bathrooms, like, which is just like I don't know why they went so crazy with this thing. Like this thing must have cost like 300 grand, right? So
yeah, right outside of like LA, Culver City, for instance, same thing. Like you can go there and find like an ADU if you sold it separately, and it'd go for like $1 million. But
yeah,
so all of a sudden now it's valued at, let's say,
yeah.
two and a
Good,
half
good, good
million.
luck. Good luck splitting the land, right?
Yeah,
That's
yeah,
oh,
yeah,
that's a nightmare in the Bay. Like I don't know if like there was some big articles of like just to split one lot took them like 2 years and like arguing at the Palo Alto City Council or something, and it was like how many people do they have to pay off to get like I don't know. It's awful and yeah, not recommended. So
no, for sure. No, it's a pain.
yeah,
But yeah, it's slowly coming around,
yeah, for
which
sure.
is nice. Which
Yeah,
is nice. Um, well, cool, man. Well, I'll take any more time, but I appreciate you getting on, and then I'll add you on LinkedIn too, and then we'll get this up to you guys and get it over to you once it's all done.
sounds great. Yeah, let me know if you need anything. Down to help. So
Okay. Yeah, you too.
cool. Sounds good.
All right. Thanks, Michael.
Cool.